Okay, dear students, let's start another live revision class. The question is Gail and Broad from section A. It's a 50 marks question. Let's read the requirement first. And you will actually find the requirements in the email from your manager. It's a very set pattern of, I would say, ATX exam. And 50 marks question, 10 marks are professional, 5 you will have on ethics. So technical marks are technically 35. Look at the part A. Email from your manager, date is 1st June 2025. And the question says, please prepare brief notes to address the following. What do we need to address? Schedule prepared by mail. I can confirm that there are no computational errors in the schedule, but I suspect that have made a few technical errors. So mathematically, plus minus, there are no errors, but technical errors are there. For example, the value should have been, let's say, 4,000, but you have written different than this, number one. For example, you should not have applied a tax rate on any XYZ value, but you have applied the tax rates. So things like that. But as far as plus minus is concerned, everything is okay. Please identify and explain errors in the schedule. Okay, now there are two things. You have to identify and then explain the errors in the schedule. Explain whether or not notes to the schedule are or are not correct, and calculate correct amount of total cash available to pay to Gail. The following movements in the retail price index should be used where necessary from December 13 to December 17. They have given us indexation factor. Normally, if your examiner gives you the indexation factor, so it's a hint towards, I would say, capital gain calculation. Number one. Number two, within the organization companies, when there's a capital gain calculation, then indexation allowance is available if company has bought the asset before December 17. Then if that asset is either sold before December 17 or after December 17, then indexation allowance is available till December 2017. But after 2017, no more indexation allowance. Okay, I can confirm. Okay, now let's see what else. With part A, schedule prepared by mail. So let's see, and let's stick to part A first. Oh no, it's very delicate. Part A, part A, part A. Let's see first this. You should assume that today's date is 1st June 2025. Okay. Your manager has had a meeting with Gail and her father Broad, both of whom are clients of your firm. Gail owns the whole of the ordinary share capital of Arrow Limited. So Gail is the 100% owner of Arrow Limited. Advice is required in respect of corporation tax issues in relation to the disposal of building and some shares. They have sold a building and some shares. Extraction of funds, and okay, let's go ahead. Schedule prepared by Mill, a junior member of your firm's tax department. Now let's see the background information. Gail was born in 1977 and is resident domicile in the UK. At least we know that one thing. Whoever is domicile and resident in the UK will have to pay tax on their worldwide income. She owns the whole of the ordinary share capital of Arrow Limited and works full-time as a director of the company. Okay. A Limited owns the whole of the ordinary share capital of Zephyr Limited. Now try to understand. Gail owns Arrow Limited, owns Zephyr. And Arrow has got 100% holding in Zephyr Limited. It means when Arrow is having 100% holding in Zephyr Limited, it means they are both member of 75% capital gain group as well as 75% loss relief group. Arrow and Zephyr. Individual, we cannot make any group with individual and companies. Capital gain group and 75% loss relief group is only possible within the companies. A Limited and Z Limited are both UK resident trading companies. A Limited and Z Limited both pay corporation tax at the main rate. Main rate means 25%. The main rate is 25. Okay. Now they're giving us historical transaction in respect of A Limited and Z Limited. In the past, few transactions happened between A and Z. And don't forget, A owns 100% holding in Z. All transactions took place at marketplace. January 17, A Limited acquired the whole ordinary share capital of Z for 180. Okay, the cost of investment is 180. Fine. January 17 is the date when Arrow Limited control the Z Limited by getting 100% holding in Z. October 2021, 1st October 2021, A Limited sold a building. A Limited sold a building, the Samson building to Zephyr Limited for 110. Arrow sold the building to Zephyr for 110. A Limited had purchased the building for 75,000 on December 13. October 21, what is happening? Arrow Limited sold the building to Zephyr. We know that Arrow and Zephyr both are both are a member of 75% capital gain group. And when there are disposal of assets within the 75% capital gain group members, so logically there will be no gain, no loss. A Limited had purchased a building for 75,000 on December 13. Look at this. The purchase date of the building is before December 17. It means that simply we'll say that sale proceed is actually equal to the index cost. No gain, no loss. Why we are mentioning index cost? Because the building was purchased before December 17. So indexation allowance is applicable from December 13 till December 17. March 2023, Arrow Limited sold a brand to Z Limited for 170. Its market value at the time was 2,30,000. A Limited had purchased the brand for 115 on June 9. Again, when there's a disposal of asset between 75% capital gain group members, no gain, no loss. Proposed transaction, all transaction will take place market value. Gail intends to raise substantial sum of money by carrying out the following transaction. 24 June 2025, Z Limited will sell Samson building to an unrelated purchaser for 140. Rollover relief will not be claimed in respect of this disposal. Z Limited will pay dividend to Arrow Limited equal to post-tax proceed of the sale. So Z Limited is going to pay dividend to Arrow, and that will be equal to post-tax proceed of the whatever will be the tax minus from the sale proceed, which is 140. Okay. 1st July 25, A Limited sell the whole ordinary share capital of Z. Whoa. 1st July 25, A Limited sell the whole ordinary share capital of Z for 250. So July 25, Arrow sold the entire holding in Zephyr. 15 July 25, all of the cash realized by Arrow Limited as a result of transaction 1 and 2 will be paid to Gail in the form of either dividend or bonus. Okay, this is the schedule which they have asked us do the correction. Okay, schedule prepared by Mill. Cash will be available to pay to Gail as a result of proposed transaction 1 and 2. Sale of Samson building to Zephyr. Samson building sale proceed is 140. They sold it for 140. And then they're saying sale proceed 140 cost. They're taking the market value. Incorrect. Why? I'll tell you. Index. Look at this, students. Can I say after December 17, there is no indexation allowance? Logically, the indexation allowance is available till December 17. After that, you will not be getting any indexation allowance. Okay, what are the errors? Chargeable gain is this, and then corporation tax 25%, dividend of post tax proceed paid to Arrow. What are they doing? They're deducting tax from the chargeable gain. When we say post tax proceed, even though you made an technical errors, you should have deducted the corporation tax from the sale proceed. And your sale proceed is 1,40,000. So actually 13,837 is not your post-tax proceed. That is also incorrect. Then corporation tax 25%. That's something very interesting and technically incorrect. Can I say when one organization is giving dividend to another company in the UK, dividend income within the corporation tax is exempt. There's no tax on dividend income. Here they are calculating tax on dividend income. Cash available in respect of the sale of Samsung building. Okay. What else? Notes. I do not think there will be a chargeable gain on the sale of Zephyr Limited due to SSE, which makes sense. I think there will be a degrouping charge in respect of the brand, but I do not know how to compute. Now, student, before we go for any calculation, it is categorically mentioned in the question that you have to explain. You have to do the correction, identify the errors, do the correction, but you need to explain as well. Now, let me first take you back here. Look at this, 1st October 2021. Arrow Limited sold building to Samsung for 110. Arrow, they purchased it for 75,000 December 2013. First of all, you have to explain to your examiner that Arrow Limited and Zephyr Limited both are member of 75% capital gain group. First point. Second, in case of disposal of assets within, in case of disposal of assets within 75% capital gain group members, there will be no gain, no loss. Third, actually we assume that sale proceed is actually equal to cost plus indexation allowance, and indexation allowance is available till December 17. Next correction, this is about this October 2021. What else? Then look at this. They are deducting corporation tax from the 4613, they are deducting from chargeable gain, and they are saying post tax proceed is 13,837, and we have to of course correct, and you have to explain your examiner. Actually the post tax proceed means corporation tax is will be deducted from the sale proceed of the building. So whatever is the corporation tax, that will be deducted from 1,40,000. And the last point which we have to explain, that within the corporation tax, there is no tax on dividend income. Dividend income is exempt. So three things you need to explain your examiner. Number one, disposal within 75% capital gain group, no gain, no loss. Actually, we assume that sale proceed is equal to indexation allowance. Why we are talking about sale proceed is equal to index cost. Index cost means cost plus indexation allowance. Why we are highlighting indexation allowance? Because the building was bought before December 17. And logically, indexation allowance is available till December 17. After that, there is no indexation allowance. Another correction. This is not the way to calculate post-tax proceed, that you are deducting corporation tax from the chargeable gain. Actually, whatever is the corporation tax, it will be deducted from the sale proceed, which is 140. Third correction which is required is there is no corporation tax on dividend income. Dividend income is actually exempt. Now, in the notes, they are saying, I do not think there will be a chargeable gain on the sale of Zephyr due to SSE. Yes, this whenever substantial shareholding exemption is available, whenever substantial shareholding exemption is available, then of course we are not paying any tax on capital gain. That capital gain becomes exempt. Okay, now the question is when this SSE is available. Can I say the substantial shareholding? SSE exemption will only be available when you have got the ownership continuous 12 months, at least 12 months in the 6 years prior to the sale. So you have the substantial holding in that company at least continuous 12 months out of 6 years before the disposal, and it is happening here. So due to SSE, no tax on chargeable gain. Now they're asking something else also. I think there will be a degrouping charge in respect of the brand, but I do not know how to compute. Now let's talk about the degrouping charge. Actually, your degrouping charge arises when one member of 75% capital gain group sold the asset to another member and that member leaves the group within 6 years of the sale of that asset, okay, and still holds that asset, then degrouping charge will arise. But due to SSE, degrouping charge will not arise. Repeat. When degrouping charge arises, when there's a transaction between 75% capital gain group members, number one, but within the 6 years of that disposal, let's say the company which has bought the asset, which is EFR here, that leaves the 75% capital gain group within 6 years of the, you can say, disposal or buying that asset, and at the time of leaving the group it still holds that asset, then degrouping charge will arise. But here, whenever SSE is available, then degrouping charge will not arise. So total there are three corrections. One regarding, I would say, they should not have taken the value of 1,10,000. Second was they have calculated in a incorrect way, sale proceed minus corporation tax. They should have done it. And the third, dividend. We do not pay any corporation tax on dividend income. And then you have to just explain SSE and degrouping charge. Now we have to show the calculation as well. I have explained you theoretical part in my own wordings. You can just write in your own wordings. So less cash will be available to pay Gail as a result of proposed transaction 1 and 2 schedule prepared by Mill. So let's do the correction here. Part A. I'll take the heading from here, schedule prepared by Mill. Sale proceed is 140. That is okay. There's no issue at all. And the heading will take sale of Samson building by Zephyr Limited. Sale of the Samson building by Zephyr Limited. Sale proceeds 1,40,000. Now logically we will deduct the index cost. Less cost. First of all, we'll take the cost to Arrow Limited. Then we'll add the indexation allowance. And indexation allowance is available from December 13 till December 17. Because the building was bought in December 13 and within the group it was sold, of course, after December 17, but indexation allowance is maximum available till December 17. So cost to Arrow Limited, I think it was 75,000 as far as I remember. Add indexation allowance. We have to mention the examiner. from December 13 to December 17. But what is the allowance? Let's see. I think they have given us the indexation factor. It's here. Pen. Where's the pen? It's here. You can see that it's 0.097. It's 0.097. Just a minute, 75,000 into 0.097. That's great. Now we will take both of them. So from 1,40,000, we'll deduct 82,275. That will give us chargeable gain. It is mentioned in the question that applicable corporation tax is corporation rate is main rate, which is 25%. Corporation tax. Okay, now what? Let's. I can confirm that there are no computational errors. I just technical way. Please identify. We have done that. Explain whether or not notes to the schedule are correct. We have done that also. Come here. Cash will be available to pay Gail as a result of proposed transaction 1 and 2. Cash is available in respect of sale of Simpson building. Can I say the entire amount they've mentioned? Come here, please. Is here. A Limited sells the whole of the ordinary share capital of Zephyr for 250. All the cash realized by Arrow Limited as a result of transaction 1 and 2 will be paid to Gail in the form of, and that's dividend is something else. Come here. A Limited acquired this. We have done this. Just a minute. Transaction, they've given us the information here. Cash available in respect of sale of Simpson building is 2,50,000. Sale proceed in respect of Zephyr Limited. And whatever the capital gain comes from that Zephyr Limited, because of SSE, it is exempt. So there's no corporation tax on this 250. And here, look at this dividend of post-tax proceed paid to Arrow Limited. From the from chargeable gain, they've deducted this corporation tax, then they've got this 13,837. So again, it is, and on this dividend, they are applying 25% tax. So within the corporation tax, there's no tax on the dividend income. Number one. Number two, sale proceed after tax is not what you have done in the schedule. It is actually 1,40,000 and minus the corporation tax, which we have calculated. So here comes the dividend to paid to Arrow. Sale proceed minus the corporation tax. Now we are selling sale proceed of Z Limited, Zephyr Limited. Sale proceed in respect of Zephyr. Limited. So the total amount which will be available to Gail. Total cash available for Gail. Simply we'll add both of them. So it is 3,75,569. I strongly believe the schedule is now corrected. Let's go to the other requirements. Part B. Calculate additional tax. Let me see the pen. Calculate the additional tax and NIC contribution. Additional tax and additional NIC contribution due as reduced by any corporation tax saving if all the cash realized by Arrow as a result of proposed transaction were paid to Gail. Either we are paying this to Gail in the form of bonus or dividend. Gail's annual income tax liability in respect of her annual salary 85,000 from Arrow Limited they have already given us. 21,432. This will be her only source of income in the tax year 25-26 other than any payment received from. So whatever now is going to be available in the form of dividend or bonus, that will be an additional income. Otherwise, before that, she is having only one income, which is salary from Arrow, and the amount is on that 85,000. Income tax liability is 21,432, and we are required to calculate additional income tax as well as additional NIC. Let's see. So first it will be bonus. I would say a basic calculation, which we have done the way back at the start of our ATX course. Part B. Payment to Gail. Payment to Gail. Let's say in the form of bonus. And the amount is 3 lakh, it's here. Payment to Gail. Three 3,75,569 as bonus. We are required to calculate additional taxes. Okay. Already, the salary is 85,000. Annual salary. $85. Let's add bonus. We'll get the total income, or you can say the net income. Can I say this net income is more than 1,25,140? So there will be 0%. Oh, something went wrong. There will be zero personal allowance. Am I right? less personal allowance. Even though the personal allowance is zero, but you have to show your examiner. If you're not showing personal allowance, then you will be getting, I think, problem in the marks. So it's better to show. Taxable income, of course, will be same. Now let us calculate income tax. Basic rate band 37,700. Applicable rate is 20%. One lakh 25,140. Oh no. Minus. Applicable rate is 40%. Now can I say from this we'll deduct 1,25,000, 1,25,140. So in the additional rate band, we are getting 3,35,429. Let's add all of them. This is your income tax liability. But the story does not end here. Can I say we are required to calculate additional income tax liability, additional NIC? Examiner has already given us income tax liability, if you can see that. 21,432. So simply less income tax on salary, which examiner has given us 21,432. This difference will give us additional tax, which we need to calculate. Okay. Now very easily we can calculate additional class 1 NIC on this bonus. Of course, applicable rate is going to be just 2% because already 85,000 has utilized all other rates. So additional class 1 employee NIC. Ooh. Mm. Additional class 1 employee NIC. We will apply that on the bonus. What is the value of the bonus? Bonus value is this. Multiply by, can I say 2%? So we're getting 7,511.38. Then we will calculate additional employer class 1 NIC. Applicable rate is going to be 13.8%. And all these NIC rates, they will be given to you in exam. Additional class 1 employer NIC. Again, we'll take the bonus value. Bonus value is this. Multiply by 13.8%. Now listen carefully. When an organization is going to make bonus payment to Gail, of course, that bonus payment is going to save the corporation tax, number one. Number two, on class one employer NIC, corporation tax will also be safe. Repeat. When company is going to make payment of bonus to Gail, then corporation tax will be safe, of course, by applying 25% rate because it is mentioned. Applicable rate is the main rate, which is 25%. Plus, corporation tax will also be safe on class one employer NIC. So let us savings in the corporation tax liability. Less savings in corporation tax. Corporation tax. We will be saving tax on this plus bonus is here. Bracket close, multiply by 25%. So will be corporation tax saving is going to be 1 lakh 6,849. So let's see additional taxes. How much we have to pay total additional taxes? Because we are required to calculate total additional taxes. Let's see. Total additional taxes. It's here. Plus this, and this is going to be the saving. So additional taxes, there will be 1,24,517 if entire amount which is coming from transaction 1 and 2 is given to Gail as bonus. The second option is dividend. Of course, when company is making the entire amount as paying as dividend to Gail, number one, there will be no class 1 employee NIC on that. There will be no class 1 employer NIC. And plus, there will be no corporation tax saving on dividend income. But we have to calculate additional income tax of the Gail. That will be bit interesting. Why? Because you have to be very careful when you are applying income tax rates on dividend income, because every individual gets nil rate band of £500 irrespective of their individual tax paying status. And plus applicable rates are also very different and they will be given to you in exam. Let's calculate. Total additional taxes when how much is the amount? 3,75,569. When 3,75,569 is given as dividend to Gail. Annual salary 85,000. Let's take it here. Dividend is 3,75,569. Obviously, the net income is going to be same. Salary plus this. Personal allowance, obviously 0. But still you have to mention. Taxable income. Now let's calculate income tax. 37,700. Can I say applicable rate is going to be 20% on non-saving income? Oh, what is this? Now be careful. From this 85,000, we will deduct 37,700. Applicable rate is going to be 40%. Can I say when it comes to dividend income, every individual gets nil rate band of £500 irrespective of their tax paying status. £500. Now we have to check how much space is left in the higher rate band. 1,25,140. We will deduct this, and this. Of course, now everything is dividend income, and still we have a space of 39,640 in the higher rate band. Applicable rate is going to be 33.75%. No, from this, we will deduct 1,25,040. Can I say additional rate in case of dividend income is how much? It is 39.35 if I'm not wrong. 39.35. So we're getting 1,31,991. Here comes your income tax liability. You can use a sum formula. It is given to you in exam. Income. Tax liability. Now let us deduct less income tax on salary. How much they have given us? You can see that in the requirement, it is given as 21,432. 21,432. So additional tax. Additional tax is 1,50,398. Can I say there will be no NIC? But you have to mention that. On dividend, there will be no NIC and no corporation tax savings. So that is all about B. Now they're talking about part C. Let's see. Non-disclosure. I hope this calculation is clear to everyone. This should not disturb you. Non-disclosure of income. State the other matters which need to be considered by us and Gail in relation to the disclosure of error to HMRC. 5 marks. Student, normally you will have a 5 marks question on ethics, and I would advise try to come up with 5 logical points to give to answer part C. It's a 5 marks question. Try to find out the five, highlight the 5 points, but all logical, okay? If you cannot, then stick to at least four, but the best is going to be 5 marks, five valid points. State the other matters which need to be considered by us and by Gail in relation to the disclosure of error. Let's see. Where is the error? Error. Okay. Look at this non-disclosure of income. Gail has realized that she has not declared some of her income in respect of tax at the way back 2021. As a result of this, her income tax liability for that tax year was understated. I have already explained the interest and penalties which may be charged in respect of this error. Now, what we have to do in this situation? Point number one, we will simply advise Gail, kindly, please disclose this to HMRC. Number one point. Number two, if Gail does not want to disclose this to HMRC, then Gail should give us the permission. Then we will disclose this to HMRC. 2 points. Third, if Gail is not disclosing, not giving us the permission to disclose, then obviously we will say no to Gail and we'll say that we are no more your tax consultant, and we will simply inform HMRC as well, but that we are not the consultant of Gail anymore. We have to inform this to HMRC, but we are not going to give the reasons of why we left Gail. Another point, we should try to persuade Gail that before we leave the client, that we should try to persuade Gail that Gail should disclose this. Why? Because this might come under money laundering. And if it comes under money laundering, then of course there's going to be, I would say, then problems, then consequences, they will be very severe. And plus, we should advise Gail that it might be coming under money laundering, and which is a criminal offense. And then of course charges, they will be really high. So simply, but still, if Gail is not listening to us, then obviously we will leave this client. So number one, we should ask Gail to disclose this error to HMRC. Second, if Gail does not disclose by herself, then she should give us the permission. We will disclose. Third, we should try to persuade her that not disclosing can have, I would say, severe consequences that could come under tax evasion, money laundering, criminal offense. Next point, if still Gail is not ready to disclose this to HMRC and not giving us the permission, then we should inform Gail that we are not going to provide you tax consultancies. And we should inform HMRC that we are no more consultant to Gail. But there's no need to give reason why we left Gail. So these are the, I would say, 5 points which you should be highlighting. Okay, you have to just write in your own wordings, no issue at all. Part D. Explain inheritance tax advantages making a lifetime gift to individual in journal. 7 marks. Explain inheritance tax advantages of making lifetime gifts to individual in journal. 7 marks. So let's try to find out the 7 valid points if we can. Can I say number one? Benefit of lifetime gift is when one individual is giving gift to another individual, number one benefit is it is PAT, potentially exempt transfer. Number one, on PAT there is no lifetime tax. Plus, if donor survives at least 7 years after making the gift, then gift becomes fully PAT, becomes fully exempt. Is that clear, students? The next point, which you can another point could be, let's say if the donor dies even within 7 years of making the gift, then of course PAT becomes chargeable. But if donor survives at least 3 years, then on death tax taper relief will be available, and taper relief will reduce the death tax, IST on death. Another advantage, during the lifetime the gift was given, no matter after that value of that asset has increased, that increase in the value will be ignored on death tax. That is also an advantage. If the value reduces, then fall in value relief will be available on death tax, but increase in value will be ignored. That is another benefit. Another benefit is lifetime gift annual exemption is available in each year, which is £3,000. Another benefit of the gift during the life, general benefits, uh, gift in case of marriage, certain amount is exempt. Small gift exemption, exemption is £250 per donee per tax year is exempt. Another benefit of the lifetime is during the lifetime, if donor is providing gift from it, it's a routine giving uh, in giving gift, which is a routine of providing such gift. For example, let's say children school fee, things like that, which will not reduce the donor's standard of living. Such gift, they are also exempt. So these are the points, students, which you have to just mention to get 7 out of 7 marks. So I would say so far exam that looks very nice towards you. Okay, now Diga point 2. In respect of possible gift of 1500 shares in Omnium Limited to Gail. In respect of possible gift of 1500 shares in Omnium Limited to Gail, calculate fall in value of broad estate which will result from the gift. Okay. Provide detailed explanation whether or not business property relief BPR would be available of the gift, and assumption that it would be available, the manner in which it would be. If it is available, how will you calculate how much it will be available for BPR? But you know that ownership period has to be at least 2 years. State briefly any other tax issues arising from the gift which need to be considered at a later date. State briefly any other tax issue. Let's see. Let's come here. Gail father Broad is 70 years old, is married to Laura. He has always been UK domicile. Broad estate worth approximately £5 million. Wow. He has not made any lifetime gifts. Wow. In his will, and in his will, he intends to leave half of his estate to his daughter Gail and other half to his wife Laura. I pointed out that it may be advantageous to make lifetime gift to Gail. Broad agreed to consider giving 1500 of his shares in Omnium Limited and ask for a general summary of benefit. We have already discussed that. Omnium is an unquoted company. If you recall, when it comes to capital gain, private company shares, gift of private on private company shares, you get gift relief. Okay. Broad was given his shares in the company by his wife in January 2021. The way back, Broad has also given shares to his wife, and we know that within husband and wife, no gain, no loss. The ownership of the share capital of Omnium Limited is set out below. Laura, Broad's wife is having 4,500 shares. Broad is having 3,000 shares. Laura's brother 1,500 and friend. Okay, leave this. total number of shares within the organization, they are 10,000. But out of that 10,000, wife is having 4,500 shares. Broad is having 7,000, which makes total number of shares, husband and wife, they are having 7,500. Company's total shares are 10,000. It means they have got 75% holding. Combined holding is 75%. Okay. And you should be thinking for a related property rule. So before the gift, the holding is 75%. Look at this. When the holding is 75%, then share price is 290. From 75 to 80, the share price is 290. Broad is having how many shares? 3,000. Logically, 3,000 shares before the gift, but applicable share price is going to be 290. After giving 1,500 shares, after the gift of 1,500 shares, Broad will left with 1,500, wife will have 4,500. So logically, their holding will be 60%. After the gift, their holding will be 60%. And when the holding is between 51 to 60, applicable rate is 240. So basically 1,500 into 240. Whatever the value comes, the difference is going to be fall in value. So basically, in case of husband and wife, we have to work on combined holding by applying the rule of related property. First, you have to use the related property rule and you need to calculate the fall in value. Okay. Then you have to recalculate the same thing by ignoring the related property rule. If for a second, if I ignore related property rule, Broad shares are 3,000, which is a 30% holding. Because total number of shares in the company, there are 10,000. Broad is having 3,000. 30% holding means applicable share price is 205. On 3,000, I should be using 205. After 1,500 shares, as given as gift, Broad will left with only 1,500 shares. 1,500 divided by 10,000, the holding will be 15%. When the holding is 15% up to 25, the share price is 190. What I want to say, actually, you have to show your examiner calculation twice. One is with related party, another is without related party rule. And whichever rule gives a higher value, that will be acceptable by HMRC. Obviously, I would say almost 100%. Always 100% you can say wherever the related property rule is applicable, related property rule will always give higher fall in value amount. But still, it is advisable to solve it twice. One is by using related property rule, another is by ignoring related property rule. So let us calculate fall in value of Broad's estate. In respect of possible Part C, I have explained you in my own wordings. You can just write in your own wordings to save the time. D, part 1, I have also explained you. Now let's go for D3. In respect of possible gift of 1,500 shares. Part D, part D. Mhm. Part D, point number 2. Fall in value of Broad estate by applying related property rule. Value of shares before the gift. Value of shares prior to gift. Can I say prior to gift the holding was 75%? 3,000 at 75%. What was the share price? Oh, oh, oh. Wait. It's here. Can I say when the holding is 75 to 80%, the applicable share price is 290? Come back. 8 lakh 70. Then value of shares after the gift. Oh, what is this? After the gift. After the gift, number of shares are 1500. Holding is 60%. At 60%, the share price is 240. Oh, oh. So here comes fall in value, which is 5 lakh 10,000. I would say always wherever related property rule is applicable, fall in value amount will be more by using related party rule, but still you have to uh, solve it twice by ignoring related party property rule as well. Let's see what happens. Fall in value of Broad's estate by ignoring related property rule. If we ignore the related property rule, let's see what happens. Value of shares before the gift. Number of shares are 3,000. 3,000 means your holding is 30%. At 30%, you can see that applicable share price is just 205. Then value of shares after the gift. After the gift, the number of shares are 1,500 and the holding is also 15%. Up to 25%, share price is 190. Let's see. So you can see that it is 330. Of course, the higher fall in value, which is how much? 510, will be utilized. But it again, HMRC will only accept higher fall in value, which is 510. If you do not have the time, then just apply a related property rule. But I would advise if you can solve it twice, then it is better. Okay, now what else they've asked? Provide detailed explanation whether or not BPR, business property relief, will be available in respect of the gift. An assumption that it would be available, the manner in which it would be calculated. Now, listen, what is happening? Broad is going to give shares in, what is the name of the company? Omnium Limited to Gail. Okay. Now, listen. Actually, we have to see, they have not given us enough information. Basically, if Omnium Limited deals with securities, stocks, shares, land, building, then of course, uh, BPR will not be available. Then business property relief will not be available. But if Omnium Limited is not dealing in this, then of course BPR will be available provided that Broad the owner must be having ownership period at least 2 years. At least 2 years. Number one. Number two, of course, BPR will be available 100%. Number two, let's say BPR is available, but Gail will have to make sure in case of death of Broad, at the time of death of Broad, Gail should be holding those shares. If Gail has sold the shares before the death of the Broad, then Gail should be, I would say, utilizing their sale proceed to reinvest in the replacement property on which again APR is available, BPR is available. Okay. So simply ownership period has to be 2 years. At the time of death of Broad, Gill should be holding those shares. If not, then if Broad has sold before that, then all the sale proceeds should be reinvested in another, I would say, business where BPR is available. If all these conditions are met, then of course 100% BPR is available. If I talk about capital gain tax, of course, Omni Limited is a private company, and definitely on private companies, when private companies shares they are given as gift, then gift relief is available. So that is all about the students. Question one. Okay, now what I want from you, obviously I don't want my videos to be very long, and you people might have noticed in our entire ATX course, almost on average each lecture is around 40 to 45 minutes long, not more than that. Because when the video goes for even 2 hours, 1.5 hours, a student they just lose their interest. Okay. I would request immediately after this class, try to complete the entire question. I'm not I'm not expecting to produce the same volume which examiner produces when it comes to a theory part. Your try to break your answer in different parts, different steps. Do not write just one very big paragraph. Like on ethics, I told you, just try to mention 5 points. Like in part D1, they've given you 7 marks on straight advantages of making lifetime gift. Try to highlight 7 different points. But there is no need to do the numbering 1, 2, 3. Don't do that. So I would request immediately after the class, try to complete the question and try to write the entire theoretical part in your own wordings. After writing in your own wordings, then read from the answer. And still you have any confusion, you can always ask in your relevant WhatsApp group and I'm going to directly reply. So that is all about today's live revision class, students. In the coming week also, we will be discussing actually revision questions from the corporation tax. But please do follow the advice which I have just given you. Thank you very much, and get ready for the pre-scene mock also very soon. ACCA is going to, of course, upload that pre-scene mock. Okay, how to deal with that pre-scene mock and when I'm going to uh, conduct your live classes on that pre-scene mock, I will announce this in your relevant WhatsApp groups. So I really want in this attempt to break the record of my previous student. She took around 92 marks, 91 marks in ATX. Let's see who is going to break this record in this attempt. So thank you very much.